Hey everybody, Charlene FX, your favorite female trader, back here with another YouTube video. Thank you guys so much for all the support that I've been getting from all of you on my Instagram, on my YouTube channel here. The support has been excellent. I've been out of touch for the last couple weeks. I've been dealing with some health issues, guys. It's very important to take care of your health. If you don't have your health, you won't have your wealth. It doesn't matter how good a trader you are. It doesn't matter how nice a car you drive or how nice your place looks or what a great person you are. If you do not have your health and you don't take care of your health the way you're supposed to, then you're going to pay for it in the long run. And I have definitely had a nice little wake-up call in the last few weeks. Been dealing with some health issues, but by the grace of God, I am doing much better now. I'm kind of getting back into the swing of things. Haven't been trading in the last few weeks. I just got back trading in the last week or so, but before that I took like a 3-week break off of trading just to kind of put some things in order and get myself together. So guys, please take care of your health. Be grateful for where you are, be grateful for the things you have. And with taking care of your health, guys, take care of your mental health as well. That's very important with all the stresses and all the things that we go through in our lifestyles today. We often forget that sometimes people are dealing with things that you don't always know about, and it's important to be kind and to be considerate of those things. Okay, so take care of your health, your emotional health, your physical health, and your mental health as well. And always remember to be grateful for where you are in life. Thank God for all the things that you have, and always look at the positive in everything if you can. Okay, so now that we've been able to kind of get that out of the way, thank you guys for supporting my channel. I'm almost at 10K subscribers, which is really awesome. So if you could like this video, subscribe if you're not already subscribed. It really helps out my channel, really helps me out, helps me grow, get my videos out there, get the word out there, and be able to help everybody become better traders, better individuals, better people, and live an overall happier life. You know what I'm saying? And really quickly, before we get into this monster video that I'm going to reveal for you guys here, it's important for you guys to know who my broker is. I get this question almost daily. Who my broker is. My broker is this broker here called Henko Trade. That's really kind of a funny name. But when I heard of them, I looked into them, I tried them out for a while, and I'm really happy with them. They have excellent spreads. They offer just about every indice, every pair. Their customer service is top notch. I mean, they even have a chat now button at the bottom of their screen where you're able to actually talk to somebody on their website. Their user face is very easy to use. I just love them. I love them as a broker. They do offer MT4 and MT5. MT5 is kind of, the new wave now that everyone is using. So if you don't have MT5, it's best that you definitely get on it. They offer max leverage up to 500 to 1, which is excellent. And their user face is very simple to use. This is actually my user face here, or my account here. Their stuff is just very simple. It's very simple. As you click it, you do you follow the directions, and then you go from there. They offer different type of account types. They offer an affiliate program, PAM accounts, MAM accounts, and even bonuses and rebates and things like that, I believe. So if you don't have a broker and you like to find a reliable broker that you can trust, that offers all the things that you need and have really good service and customer service, fast withdrawals, fast deposits, all that, this is definitely the broker for you. I'm very happy with them. So give them a shot. And if you want to sign up with them, just use my link below and follow the steps, and you can get your account going with them in no time. Okay. So let's get into the nitty gritty of this video. If you guys have been following me on Instagram, if you're not already, at Charlene FX, follow me please. You would have already known that I have been, even though I took a break from trading for a couple weeks, I didn't completely disconnect from the charts. I did do some studying and some back testing on gold. Some of you may or may not know this, but gold was my main pair for a while. I did really well with it. And then once Corona, poked its head out, gold became very difficult for me to trade. It it was very highly manipulated in my opinion, and it made it very, very hard to trade. And the way that I was trading it back then, it just did not work anymore. I was just taking loss after loss after loss. It wasn't doing the things that I normally expected it to do and that it had done in the past. And so I just stopped, and that's when I kind of gravitated over to the GBP pairs, which I was doing well with for, up until now, I guess. So I had been curious about gold. I always kind of kept my eye on it here and there. I stopped trading it completely, but I did always kind of keep my eye on it to try to kind of find out what it's doing, how is it moving, and how can I kind of get back into trading it, because gold does pay out very, very well. It is a very dangerous pair to trade because it's so volatile. And it's an exotic, you know what I'm saying? It's not a regular currency, it's an exotic. So you can't expect it to move the same way that it moves, the same way that currencies moves and whatnot. So I really, really had to delve into it and try to understand. And for a long, long time, guys, I just couldn't get it. I couldn't understand what it was doing. I was watching it and I'm thinking, the retracements are crazy on it. The levels, it did respect key levels. That's one thing that I did notice about gold. It does respect key levels. But it was the retracements that really, really took me back. But as I kept on studying it and I kept on backtesting it, I came to realize that the retracements aren't so bad because it's just moving as normal market structure would. It's giving you signals. Those retracements are not just, fake outs or liquidity grabs by itself. These are actual movements that the market needs to make in order for it to continue in the flow that it wants to continue in. So in retrospect, those retracements and those wick outs and things, those were kind of good things. Those were indicators and signals of what's to come later on in market structure and how you could capitalize on those things. So once I decided to make the things that I was afraid of with gold my friend, I started looking at things very, very, very differently. Very, very differently. And guys, studying, backtesting, watching other people's strategies, you learn tidbits from different things. And if you're able to put all those things together and mold it into your own kind of style, then you can find a strategy. You can find something that works for you, and you can capitalize on it if you use the proper discipline, and obviously the old age adage of proper risk management. So if you do that, guys, you guys should be great. And once I continued paper trading it and I saw the setups that I was seeing, the things that I saw, I was like, man, this really does work. It really does work. And gold, it was always there. The signals were always there. The moves were always there. I just wasn't seeing it. I wasn't seeing it because I didn't know what to look for at one point. And now that I do know what to look for, I'm able to capitalize on these moves and get better at them. Now, am I going to take losses? Obviously, yes, everybody takes losses, but you want to take more high probability trades more than the lower probability, manage your risk and things like that. A big shift for me in going back to trading gold, guys, which is a huge change for me, is using indicators, aka fibs. Okay, I was a big hater of fibs for a long time because I could not understand how to use it. It did not work for me. It did not agree with my brain. I couldn't use it as an added confirmation for me to be able to come up with a trade idea. It didn't really help me understanding my charts. It was just better to use price action. However, trading exotics indices, you cannot just go off price action. You almost need indicators to help you be able to capitalize on it. Now, you don't need it in a sense of you can't trade it without it. You can trade it without it, but it just makes it a little bit harder for you to trade without it, and it's a little bit easier to do it with an indicator. So when I went into using fibs, it just kind of clicked for me. I don't even really know how it, I guess, after weeks and weeks and weeks of studying, everybody has that moment where everything just kind of comes together for you. And going back to fibs was a very, very tough thing for me, but it wasn't tough in terms of using it with gold because it just worked. It just worked. I was placing it in the right places. I was looking for the right things. I had the discipline enough to wait for the pullbacks and the retracements that I was looking for, the signals that I was looking for, the wick outs and all that kind of stuff, the retest. All these things really played a part in using fibs and using them on the higher time frames as opposed to the lower time frame. So these are all things I'm going to go into this video. I'm going to reveal everything that I do from front to back on how I catch moves, what I'm looking for. I have a copy of group that I started a couple weeks ago, and I switched it from GBP into gold now because gold is going to be my main pair. So, instead of dropping one or two, signals here and there for GBP, I'm going to be looking at gold every day. So I decided to switch it over to gold because it's my main pair now. I do like it. It is a lot more volatile. I'm willing to take the bigger risk on it because the payouts are much better on it. It's just, and I have a lot of fun with it. Gold has been challenging for me in the past, and now it just seems like, man, I've been missing out so much on gold because of what I've been seeing lately. And it's the moves are there. The moves are there, guys. It's possible for you guys to catch them, to be able to profit off of them. You just have to know what to look for and when to enter the market. That's it. What to look for and when to enter. That's it. That's all you need. I'm going to show you guys how I've been able to keep my strategy very simple. You guys know I'm simple FX, so I try to keep things as simple and as basic as I possibly can, right? Because I don't like to make things difficult for myself. But at the same time, you have to have some knowledge of how the market moves. You have to have some knowledge of market structure. You have to have knowledge of your, support and resistance levels, your key levels, understanding rejection areas, retest areas, liquidity areas, all that. All these things come into play. So you have to know this. So is this video going to make you a master at gold? No. Oh, no, but it is going to help you pull some bits and pieces out for you to be able to incorporate that with what you're already doing, or even change up what you're already doing for you to be able to capitalize on this beautiful pair, which is gold. All right, guys. So the first thing I want to go over is going to be a loss. I took a loss on gold last night, and it was a stupid loss. When I woke up this morning and I saw that my trade had got stopped out, I was super annoyed at myself because I know better. As a trader, you know better. When you make a dumb mistake, you make mistakes, we're all human, but at the same time, it's kind of like you kind of knew in the back of your mind you should have went this route, but because of a couple of factors, you took a different route, and it caused you to take an unnecessary loss. So, and then it affects me a little bit more when I take losses now, because I'm not just taking losses for myself, I'm taking them for everybody that's on my copier group. So my trades affect other people, so I have to kind of take very high probability moves. I have to be conscientious of the fact that, I'm not just trading for myself, I'm trading for other people as well. So when I take a loss, it's not just a loss for me. It's huge. It's huge for me because I want to make money for myself, and I want to make money for the people that are trusting me to help them make money as well. So when I make mistakes like this, it really does get to me. However, I'm already over it. I don't dwell on losses. They happen, but as long as you learn from the loss, as long as you're able to understand that it's okay to take a loss, as long as you keep it small, you minimize it, you're going to be fine. This trade that I lost last night, I lost about 2,000 on the trade. But had we won the trade, I would have made close to 8,000 on the trade. So it's like, the risk reward was there in a way. But the odds just weren't in my favor for that setup. But I'm going to go over it first for you guys to see, and then you guys will understand exactly. And in going over setups, whether it's a win or a loss, there's always something to learn. Always something to learn. Okay, guys. So I'm going to remove this here really quickly. This is just a breakdown that I had from last night into this morning. Okay, so this is the trade from last night. I'm not going to remove everything here because I want to show you guys. Okay, so last night we had entered a trade, I believe. Let me go to the 30 minutes so I could see better. We had entered, we had a win last night that was right here, right? The first trade that we got was right here. I normally trade gold, guys, between like Asian session into like Tokyo into like pre-Londonish. I don't like to trade it during New York session only because it's super volatile during that time. It can do a lot of jerkiness and stuff, and I'm just not cool with the way it moves that much. It just moves a little bit smoother over Asian into pre-London into London session. So I just prefer to trade during those times. Even though I'm sleeping during London session, I set up the trade and I kind of let it play out through the night and see what happens. And more of the times, it plays out, to the T. All right, so let's go over this trade here. Let me use bar replay so you guys can understand better. All right, so this is what I was seeing last night. So last night, let's go to the 1 hour. So this is what price was doing last night, right? Price was making higher highs and higher lows, right? High, low, high, low, high, low, high, and then a low, and then a high here. Now, this low that came down right here stopped right around this level right here. And I'll tell you guys exactly why I lost the trade. It was literally one reason that I lost this trade, that I did not take sells instead of buys. Price made a low right here and it closed above this low here. So there's always a structure within another structure, right? Overall, you have to go with the higher time frames and continue on with the lower time frames. Once I do a full breakdown for you guys will see my daily and my 4 hour are my main time frames that I look for to do my main breakdowns on. And then I literally drop down to the hour, 30 minute, 15 minutes to look for my entries. All right, and sometimes I go down to 5 minute, but I'm okay with the 15 for now, for gold specifically. Okay, so what I saw was that if you look here, price made a low, and then this low closed above this low, and this low kind of closed right around the same area. But if you look in the past, you'll see that price keeps on rejecting this area here. So that's something that I kept in mind. And it bothered me a little bit. That bothered me seeing that because I couldn't understand why price was having such a difficult time breaking this level. If price broke bullish here, strong bullish, broke our trend line to the downside here, broke above, right? And it retested this last high right here, right? Price retested this last high and then it broke below. It held support down here, broke above again, held, and it just keeps on holding this level right here, right? Held, okay? So I said to myself, all right, price keeps on holding this level here. If this support continues to hold as it did here, okay, it held as a resistance. If I pull this all the way over, okay, it was holding as resistance at one point. Price could not break, and then it broke to the downside. Finally broke above, had a nice bullish engulfing here, broke to the upside, and now it keeps on holding. So it's telling me, hey, price is holding this level. Most likely, it probably wants to continue to the upside. So that's why I had a buy limit down here for price to come down here, reject again, and then continue back up. And so I thought price was going to stay inside here. I did not anticipate price to break below to the downside here. I just didn't see that happening because for so long price had been holding this support for quite some time. So that's the reason, that's the one reason why, guys, why I lost the trade, is because I saw that price kept holding here, even though on the higher time frames price was still bearish. It was still bearish. Even though we broke the trend line here, this high did not break. This was my indication right here. The fact that price did not break, once this high was formed here, and that high did not break this high right here, I knew we're still in a selling market. We're still going to sell in the market. As long as this high doesn't get broken here, that's fine. These are minor levels that was broken here, but price is just retracing to do what? To take out all the liquidity that's sitting up here. All this, like all the, I would say, swing traders that have been holding sells from like way up here or something, or way over here or something, right? These are all stop losses down here. There's a lot of money, there's a lot of liquidity here. So you have this huge drop to the downside here. You have to have some sort of retracement to correct this move and then to continue down. Why do you need that? Because that is market structure. You need price to go up, down, up, down, up, down, up, down. That's what you want to see, okay? These are the things you have to see for you to say to yourself, okay, price needs to retrace, it needs to come back. You need to wait for that pullback to happen for it to give you the real signal for the overall move, right? So last night when I was looking at this move, I said, it sells all day long, but this one support level here was just throwing me. It kept on throwing me. Look at how many times these 4 hour candles could not break below this support. It even made Well, I should have seen this. I didn't see this. It even made like a little mini head and shoulders here, right here. So in my mind, I didn't notice the head and shoulders last night, but I did notice that price was holding support here and it did not break. So overall, I said, overall on the high time frames, daily and the 4-hour, we are pushing bearish, but price could not break this support level down here. What I should have reminded myself is that the higher time frames take precedent over the smaller time frame zones. Okay, so if I know on the daily time frame that we are pushing overall bearish on the daily, right? Because we're just doing a retracement on the daily. If you look here, you'll see price was, let's get our marker again. Okay, high, boom, low, high, low, high, low, high, low, high, low. That's all price is doing. So right now, I could just be doing another retracement for it to come down to create another low. All right. So if I know this on the high time frames, then the zones on the smaller time frame, like the 4-hour or even the 1-hour time frames, those levels should not scare me as much at all. Actually, they shouldn't scare me at all because I know overall high time frame is king. So I need to follow what the high time frame is telling me, which is bearish. If your daily and your 4-hour is telling you for sells, take sells. Take your sells because gold respects levels. Gold respects levels here, here. Okay, we have a level down here, so we have it held, pushed up, held. If price comes back up here again, most likely it's probably going to hold again. Okay, so let's look here at this setup that I saw. So last night we had entries right around here, right? Let's go to the 30 minutes so we can see better. We had entries right around here. Price came down. Yeah, we had entries. I remember we entered right on this candle right here. I remember price pushed up a little bit and then it started pushing down. Now, because I was so nervous about this level down here and I saw price pushing down, I put stops at break even and I ended up closing the trade early instead of letting it run. So we did have a small win last night, but had we held the win, price would have continued to the downside, as you see here. It would have took some time to do it, but eventually price did end up coming down to the downside. And that actually, this level actually was my TP level for this trade up here. However, all this bouncing up and down, up and down, up and down made me nervous. I thought we were going to start ranging, and eventually we did start pushing. I got out of the trade and we came down. So what I said was, okay, price comes down here. If it comes down here, more than likely it's probably going to reject, right, and then come back up. So I had buy limit orders right around here and then anticipated price to continue back up, and price ended up hitting, I think I had our stops down here and somewhere like target was like up here, and price ended up hitting our stop before it actually started pushing up. And then it didn't start pushing up until New York session, until New York. Okay, so that's why I lost that trade, guys. I closed this one too early. So this small win wasn't really much of anything because I should have held it, because everything was saying sells. Everything was saying sell, 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 sell. We had the sells, but because of all the ranging back and forth, it just did not come down cleanly. And I didn't hold the trade. Had we did hold it, this would have been an excellent trade for the night. TP would have been down here, done, and that's it for the day. And then New York session price ended up pushing back up. Okay, and it wasn't really an impulse move. It was like, if this level wasn't here, this last low wasn't here, or if it didn't look like this, like so many rejections and then pushing up like this, more than likely I would have kept my sell buys and I would have held the sells, and would have been a nice win. But because I'm looking left and I see all these rejection levels, it really did give me pause and not give me the confidence that I needed to take the sells, which I should have taken. So guys, a word of advice would be, the trend is your friend. The trend is your friend. If your daily and your 4 hours are saying sells, look for sells. If it's saying buys, look for buys. That's it. With gold, it's going to respect those levels. It's going to come to those levels like a magnet. It's gonna, retest. It's gonna come looking for those liquidity levels. So put your confidence in it and just take your patience in check, because in here I just didn't have the patience. And another thing was, Last night I missed a nice sell on gold. Not last night, but the night before, because instead of doing all this mess that it did last night, the other night before, it just came down nice and clean. Like, I think it was it here or where was it? Let me go to the 30 really quickly. Right here. It was right here. Yeah. Last night, price did the same thing it did here. If you guys look here, you'll see it's the very same move that happened here. Price pushed up, right? Reject, push, broke previous highs, push, broke previous highs, found resistance, right? Broke down, found support, broke up again, tested twice, made a little double top, came down, tested this level again and came down. Now, if we look here, you'll see, and this is what I love about gold. This is what I love about gold. It's not always to the T, but it always retests. It always retests. It may not always come to your exact level, but it always retests. Not only that, guys, okay, but going back, let me go back here again really quickly to show you guys. This is where did we enter? Was, I believe, right here, right? This is the analysis that I had for sells, which is why I should have taken sells and I didn't. Okay, looking at gold here, we'll use fibs, right? Swing high, swing low. Look at where the retest happened, right at the 61.8. And this is why I had this oval here, because I'm like, oh, this is it right here. This had already happened during, like, before market even closed, like around 3 o'clock in the afternoon. It already happened. That was the signal that gave us the indication that we wanted to take sells. Okay, I saw this last night and I said, this is it. This is my signal right here. Price had already dropped like this. I saw that price had broke this level here. So what I wanted was for price to come back to this level here and then continue to drop. Which, did it do that? I think it did not. It did not come back to this level. It came around here. All right, so once this level broke right here and we entered for sells down here, we could have continued up, because last night's stop loss was here, right above this level here, and then our take profit target was down there. This was the analysis that I had last night, plain as day for last night. Only reason why I did not hold this trade is because price started ranging. So I said to myself, why did I close that trade? Why did I take buys? What happened that caused me to not follow my proper analysis and just go with what I see here? I mean, I had my fibs in place. I had a high and a low that was formed. Price came up to my 61.8, closed nicely. It broke these highs, came down, made a little support down here, broke this support, came down at a nice bearish engulfing here that took out all these lows. Price came up, tested this level, and it didn't retest here, but it did quite test, come back up here, right in the middle of this candle, right about there. Okay, so what happened? It was this freaking level down here that freaked me out. And another thing is, trading GBP for so long and then going into trading an exotic like gold, I have to constantly tell myself that I cannot trade gold the way I trade GBP. I cannot look at it the way I trade GBP, because GBP pairs, I'll just say GJ, if it starts ranging and I'm in a trade, I get out. I get out of the trade, because it's not worth it to hold it and risk the trade reversing on you, okay? With gold, I can't do that. I didn't tell myself that last night, but you can't do that with gold. With gold, you have to basically let it play out. You kind of gotta let it do its thing. You may have to sit and draw down for an hour, 2 hour, whatever it is. I entered this trade last night at 8:40. 8:40 I entered the trade. I don't think it hit TP until like maybe 1 in the morning or 2 or something like that. So that was, I mean, it took damn near 4, 5, 6 hours for TP to get hit. I'm not used to staying in trades that long when trading GBP, because I always scalp it. But with gold, I'm not scalping gold. I'm looking to catch a move on gold. Gold is not a pair that you can scalp gold. You can have fun scalping it. But part of growing as a trader, part of evolving and getting better and becoming a lot more advanced and kind of leveling up in your trading game is having the discipline to be able to catch actual moves instead of just grabbing bits and pieces out of the market. You can grab bits and pieces out of the market and be content with that kind of thing, but with me, I'm more trying to challenge myself. And because I've back tested it for so long and I've won so many trades, paper trades, back testing it, these are moves that I know can happen, and gold often always respects those key levels. If it rejects these levels, if it's coming back in that direction, it's going to touch it. Like, it's going to tap that level. It's like a magnet. It's going to pull it back to that level. Even if it rejects it and closes above, it's going to come down to that level at some point. And had I held that trade, would have been an excellent win. Excellent. This would have been like a 50, 60 pip win for all of us last night. You know what I'm saying? So and that's a move. That's a move. Catching that kind of move on gold, that's not a scalp. That's catching a move on gold. And that pays. Okay, let me tell you, it pays. Even on a small lot size, it's going to pay. Okay? Which is why I've fallen back in love with gold again, because the moves are just there. All right. So those were my confluences with this setup, guys. It was more just seeing, my fib setup, seeing the pullback, right? The pullback, right? This big move. You never want to jump into a trade at the bottom, right? You see this drop happening, you get FOMO, and you're like, oh man, I missed the move. Let me just jump in and see what happens. No, you can't do that. Gold will decimate your account if you do that. You have to wait for the pullback. Okay. Night before last, when this move happened, I didn't jump in. I missed this entire move last night, but I was okay with that because I don't get in until I see a pullback. I need to see a pullback. If I don't see a pullback, then I'm not comfortable entering the trade, because you can't have FOMO. I don't have FOMO trading anymore. That's out the window for me, right? Which is a good thing. You never, ever want to have FOMO with trading. And that's the fastest, most reliable way to blow your account, is to just jump into trades when you see the market pushing in one direction, thinking that you've missed the move and you got to just hurry up and grab it. Whenever you see a move happening, just know that it's a setup for another move. It's a setup for another move. Just wait your time and it will come. It will come. Okay. This move that happened here, this drop right here, this is the retest of this move. That's the retest of this move. It didn't come to this level. Let me make this a little bolder so you guys can see. But this would be the level that I'd prefer to come to, right around this level here. But usually when I place my fibs, I'm looking for price to come between the 61 and the 76 point level. This is like the zone that I would like price to come to. And if I'm looking for a trade idea in here, my stop loss would be right above the zone right here. And then my take profit would be right at my negative 27%. Okay. So that's what I'd be looking for. That's what I look for on my fib placement. Okay. So that's what I was looking for, guys. And let's say we don't use fibs from that high level up here. Let's say we use it, I don't know, from down here to down. Let's say we use it from our last high to our last main low that it formed down here. All right. Let's take this trade idea off. We knew that we were looking for our TP level down here. Let's say I take fibs and I place it like this. Okay, we want price to come to our 61.8% or our 76. Did it come to that? Doesn't always happen. It doesn't always come back to that. Price could more than likely come back up here and test it and then drop, but we don't know that. It doesn't always happen. Last night, it didn't do that. It didn't do that until this morning. This morning, it started pushing back up to this level. Now, if this level right here holds, right, if this zone right here holds, then we're still in a selling market. We're still going to be coming down for sells. All right. But if it breaks, then, we're still in a selling market, even up here, to be honest with you. But for stronger sells, we want our last highs to be respected, right? This high could not break this high. So we'd like price to kind of, come back here and then start coming down again, do a little dance and then come down, maybe come back, come down, do a little dance and then come down again, right? These are the things that we want to see with price. Okay, so that's pretty much it when it comes to this part, guys. That's why we took that loss last night. I just let this get to me when I should not have. I don't really know why that happened, but well, yeah, I do know why it happened. I let my past habits of trading GBP pairs get in my head when trading gold, because you can't trade gold the way you trade that. If I saw this on GBP, for sure, I would have taken buys from down here because of all the rejection levels. But with gold, you really can't look at it like that. However, in my back testing of gold, rejection levels do matter. It's just, so you win some, you lose some. But at the end of the day, if you follow the trend that the higher time frames are telling you, you'll always have a higher probability of winning the trade if you follow the trend. If you go against it, it's just you're gambling at that point. You're playing with fire, and it's just not worth it. So from here on out, for sure, I'll definitely be following my gut and following the trend, and not looking for things that, oh, well, what if it doesn't go this, or what if it doesn't go that way, And another thing with gold, guys, is your directional bias is huge, right? Because with GBP pairs, I always tell my students and myself that you have to be fluid with the market. You have to look for buys and look for sells. Like, look for the market to go in either direction and prepare yourself for whichever way it may go. But as soon as you see, your overall buy is playing out and your plan playing out, then you jump in, you execute on the trade, right? But with gold, you kind of have to, in a way, flip that around, and you can't be fluid with gold in a way. You can't. You have to have a directional bias and go with that bias. Doesn't mean you have to be married to your bias, to your trade idea, but at the same time, follow your high time frame analysis, and whatever your directional bias is, stick with it. So if I'm looking at this setup here and my directional bias was sells, I should have stuck with sells. I have a higher probability of winning the trade if I would have stuck with sells than I would have if I had gone with buys, which actually played out because I ended up losing the trade because I took buys instead of taking a sell. Okay, had I stuck with the sells, I would have been fine. It would have been a nice win. TP would have got hit. Everybody would have been happy for today. But it didn't play out that way because I let my past habits get in the way. So what I'm still training myself on doing, guys, is teaching myself to not trade gold the way I've been so conditioned to trade GBP pairs, because it's a different instrument. It's a different beast. You have to look at it completely differently. You have to plan for things. You have to wait and practice patience. One thing that I love about gold is that your setups will come. Eventually, they will come. There's a lot of waiting involved, but eventually, if you're just patient enough, they will come. And when they come big. They come huge. Those retracements, those rejection levels are huge. Majority, I would say almost all of my trades on gold are mostly limit order trades. Very rarely do I take a trade and it's like a stop order, unless I'm stacking and I'm looking for price to continue in a certain direction. Because let's say, for instance, I see this setup here, price rejected and it came down. Once I see a pullback happen and I enter the sell limit on the pullback, I'm anticipating price to now continue down because the pullback is already done. It's already made a high. It's not making new lows for price to continue down. So maybe then I'll have a couple stop orders in place for price to continue pushing in a certain direction. But that first order is most always going to be a limit order. So I'm looking for a retracement on my trades. I'm not looking to catch at the break of low or the break of high. Trading gold like that, for me, trading gold like that is too risky, because unless it's like a clean move, it can retrace on you, and that retracement can kill it. It can kill your account because gold, moves so much and it's so volatile, and the point system is so different on it. So for me, entering at break of lows or break of highs, which is what I do with GBP, it's almost, I won't say impossible to do with gold, but it's just, you have a higher probability of winning the trade if you get in at a pullback or retracement than you do at entering in the middle of a body of a candle. Gold kind of does this all the time. So you get in the middle of the body and you're risking sitting in drawdown for some time, as opposed to getting in at the high, like the wick of an entry. And even if price does retrace, you're still in profit, or even if you're in drawdown, it's very, very small. You know what I'm saying? And majority of my trades, guys, that I've won on gold lately have been on wick entries. If you guys notice, you go back into my stories and you see I've been able to get a lot of wick entries, and that's mainly based off of my key levels, the retest levels, and my fib retracement levels, period, point blank. That's what I've been using. That's how I keep it simple. So the only thing you have to tell yourself discipline wise is to wait for your pullbacks, wait for your fib levels to get hit, and look for your key levels to get respected. Once those levels are respected, start looking for your entries. Look for your entries, place your stops in a safe area where you're comfortable with, the level of risk that you're putting on your account, and then let it run. Set it and leave. Forget it. Let it run. Let it do its thing. Trust the process. Trust that the move is going to play out, because if you don't and you get scared, you're watching the numbers go from profit to negative, from negative to profit, big negative, small profit, big profit, back into negative. It's going to mess with your psychology. It's best to just set it, place your stop where you're comfortable with whatever the loss is going to be at that level, and then let the trade play out from there. And do not ever move your stop loss. Don't move your stop. Your stop gets hit, it gets hit. That's it. You take 1-2 losses, hey, call it a day. Usually with gold, there's no like second chance opportunity when it comes for me, because I'm not really scalping it. I'm looking for a move. So with gold, I don't usually take 1, 2, 3 trade setups in a day. I just won't. It just takes too long to wait for the confirmations for the setups. So more than likely, if I take a loss that day, that's going to be the trade for the day. And I just got to wait on the next session to come around and then look for my next opportunity for the next trade. So that's that with this. Okay. So I hope, this was able to help you guys out with this. I know I went into a lot of detail with this, but let me do, a full breakdown for you guys on how I look at gold, what I look for, and, how you guys can capitalize on it as well. Okay. So let's go to the weekly time frame. Let's start with the weekly, right? I do my breakdowns on gold from the weekly, daily, 4 hour, 1 hour, 30, 15, 5. I literally go down every time frame to look for my trades. The only time I don't really look at the 5 minute or the 15 is if I don't see my confirmations on the higher time frames yet. So if I'm looking for a pullback, or I'm looking for a level to be tested or respected, if I don't see that on the higher time frames, I'm like, all right, I'm gonna wait. I'm gonna wait longer, because if I don't see it on my higher time frames, chances are I'm not gonna see it on the lower, because it's not there yet. If I'm looking for a test of this level on the 4 hour and price is right here, I'm not gonna go down to the 15 minute, because price is still gonna be right here. It's not up testing this level yet. So what's the point of looking at it there? Just doesn't make any sense to me. So unless I see my confirmations play out on the higher time frames, I don't really care to go down, because I'm not comfortable entering the market until I see those confirmations play out. Okay. So looking at the weekly time frame here, you'll see in the weekly time frame, we're kind of in a steep kind of downtrend, right? Price has been pushing down for some time. It does come back to test every once in a while, right? It comes down, test, come down, test again, comes up. Did not test here, but it finally did. Broke this high, rejected, and then pushed back down. Tested again, came down. A whole bunch of liquidity, pushed up, grabbed this whole liquidity. Did not break this level here, so it continued making lower lows and lower highs. Okay, so beautiful market structure right here. This is what you want to see. You want to see a trending market. Okay, this is a beautiful trending market. This is what you don't want to see, right? This is what you don't want to see. Just sideways movement, right? Consolidation. Now there's moves that you could have caught in here. Obviously, this is a strong the weekly time frame. But if you saw this on the 4 hour or you know what I'm saying, like, you just don't want to see sideways movement. You want to see nice push of the market, a nice bullish movement, right? Push, push, and now we're coming down. Okay, and then we see that price has held this level right here, right? So we have a resistance that was broken here. Price found support and broke above again, feeling a new high. So we have a new high up here right at 2066. All right, so 2066, that's the highest price, or 2075 rather, that price tried to get to before it started pushing down. Has not been back up here in some time. Do I expect price to come back up here and test these levels? No, not anytime soon, because it's in a steep downtrend right now. Okay, so now let's look at the daily time frame. And I look at the weekly and monthly guide just to get a bird's eye view of what's happening. I don't really market up too much, but just to get an idea of what the market is doing on those time frames. And I keep that kind of, in the back of my mind. All right. So we look at the daily time frame here. We'll see that price made a high, lower high here, and we're continuing to make new lows and new lower highs and new lower lows. All right, so price made a high right about here, came down, and we haven't been able to break this level for 1, 2, 3 times in the past. All right, so what I would do here is I would place a level right about there. Black, make it nice and thin, nice and sexy, right? Keep your charts clean. Okay, and this would be my daily higher high, right? Because this is a daily time frame, but this isn't today's high. You know, this is a high that was held before price began pushing down. It tested it 1, 2, 3, 4 times before price pushed right back down. Okay, so I'm not really too worried about that level right now unless this high or this high gets broken. Okay, so for now, my daily low is right there. So I'm going to label this daily low. Okay, so now we see we're in a nice downtrend. Now I'm going to zoom in some more to look at some more detail, right? So in the past, we see that price found support and it broke straight through support, rejected here, and then started pushing back up to test this level again. All right, so price broke below here. What you want to do, guys, is you always want to look for that pullback. Look for that retest level, look for that pullback, and look for the pullback where you find a cluster. Okay, this is my little special Charlene FX strategy. When you see that cluster break, that's what you want to look for your retest levels. I'm going to show you what I mean right here. Okay, so and we're on the daily right now. Okay, so if we look here, you'll see we have a resistance here and then turn support and then turn resistance again before price decided to come to the downside. So where's my cluster? Right now, this is my cluster. Okay, let me highlight it really quickly. This is my cluster. Where do I have another cluster? Oh, I don't know. Right here, another cluster. So when I see these clusters forming, what's price doing? It's collecting orders. Okay, my cluster orders, collecting orders right now. All right, boom, 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 boom. These are all daily candles. That means for days and days, 1, 2, 3, 4, 5 days, price wasn't doing much but collecting orders before it pushed up. Collecting orders, pushed up. Collecting orders, pushed down. Okay, they like to call these order blocks or what's the other word for them? You know, supply demand zone, things like that, right? I like to call it the cluster zone. Okay, when you find these cluster areas, that's when you want to look for your breakouts, and that's when you want to look for your retest levels. You want price to retest those clusters before it makes a move. Okay, so that's what I look for. When I see those clusters, I'm like, all right, I see this happening here. I see price broke below here. I want to wait for that retest. I want to wait for my fib level, or I want to wait for a retest level. So I'm going to take my little right here and I'm going to say, okay, I have a level here, I have a level there, and boom, I have a level right here. So if I'm looking for a trade idea, once I see the cluster form and that first test of that level on my higher time frames, now, and I see a rejection, next candle does the same thing. Now I'm looking for my sell entries, right? Because price pushed up, could not break this high. I know I have a daily zone up here. I have my cluster. I have a bearish breakout. What do I need to wait for? That retest. I need to wait for that retest. Price made a high and we made a low. Even if I was to pull out fibs here, put it at the swing high and swing low, I need price to come back to my 61 or in between my 76. Did it quite come back there? No, it didn't. But it retested my last support level of my cluster. Okay, so even if I didn't enter up there, I still have my confirmations of my cluster zone being retested and price failing to come above. What I'd like to see is price push and then reject. That tells me, oh, price tried to come back and it couldn't, and it closed below. Now I have more confirmation for me to take my sells. So if I'm looking at this setup right here, which is a beautiful setup right here, I see my break, I see my retest of my cluster level. Price broke out of its own cluster, came down, and again. So what happened again? Price did the same thing it did here. Cluster, breakout, cluster, breakout, cluster, breakout, retest, cluster, breakout. What's here? Retest. If I grab my level here again, let's look at, I can pull this all the way across to here. Where did it retest? Right there. Right there. Let me do this here. Retest. Retest. Okay. So if I see this happening, break, come back, test this level again, come down, hey, I'm taking it. And guess where I'm placing my entries? Right here. Guess where my sell limit orders are? right here. Price needs to come back to test this area and come back. Now, can it come back up here? Yeah, I could come back up here, but I'm going to place my stop in a safe area. Now, if that happens, hey, it is what it is. You lose the trade, it's too tight, you know, it is what it is. But have confidence in that you've already seen this happen. Break, cluster, retest. Break, cluster, retest. Okay, let's break out fibs again. Swing high, swing low. Where did it retest off of? 61.8. So if it doesn't retest your level here, hey, it might happen on the next setup. This is why, guys, you do not want to have FOMO. Just wait on the next one. And yeah, it took a few days. It took a few days, yeah, to happen, but it's coming. It's coming. Just wait. And these are all on the higher time frame levels. Let me zoom in some more for you guys to see better. Okay, break, swing high, swing low. Where did it retest? Right in between our golden area. Hey, what's our golden area, Charlene? Oh, 61.8 in between 76. Okay, that's it. That's what I look for when I'm looking for my trades. And then how do I get those wick entries? Damn, Charlene, you got some wick sniper entries, because I'm letting my orders sit right here, because that's what I'm anticipating price to do. I'm keeping my stop loss in a safe area, and I'm going to let this baby play out. I'm going to have my stop orders right around here, right? Put my stop, where can I put my stop? Well, I don't know, maybe above this level right here, because price already tested it here. Can it come back and test again? Yes, guys, it can do that. It can do that, and it's just not your day in the market. But chances are it's probably not going to do that. It already broke below here, huge bearish engulfing here, came back with the pullback, and now we're in. Now we're in for the trade. And where's your TP going to be? Oh, I don't know, negative 27%. Where did price come to? Oh, negative 27%. There's your trade right there. That's your trade right there. Your wick entry. And if price does want to retrace, did it ever come back to your entry? Hell no. It never came back to your entry level, because you got in at a retracement. You didn't get in at a break of low down here. Let's take this off real quick. You didn't get in down here where price decided to wick out and then shoot up and knock your ass out of the market because you got in too late. No, you got in at a retracement level. That's the best place to get in on a trade. But hey, Charlene, this is on the daily time frame. You're not going to enter on the daily time frame, right? No, you're absolutely right. So let's go down to the 4 hour. Okay, but these are things you want to see on the higher time frames to give you more confirmation for your lower time frame entries. Okay, you want to see these things. All right, so now it looks a whole lot more noisier on the 4 hour time frame, but to me, I still see the same damn thing. Same thing. I see a level that was held here. I pulled this all the way across. Another cluster level that was held. Price broke above, and what did it do? Come down to test. Came down to test, right? Broke. I have a little range here, break, retest, right? Tested this level here, grab liquidity, and boom, we're off to run into the races. And what are we doing here? Creating high. New highs, pushing to the upside, right? And what's also price doing? Oh, market structure. Ooh, look at this, right? Boom, 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 boom. Boom. Market structure. What do we have here? Head, shoulder, shoulder. Oh, what's this again? Oh, a retest, and then a drop to the downside. A drop to the downside. The more clearer it looks for you on the higher time frames, the more confident you'll be on the lower time frame. The more confident you'll be on lower time frame. Guaranteed. Guaranteed. Okay. So let's see if we come to the markets. Let's say, okay, so all this already happened, right? Let's say all this already happened and we're coming to the markets right around this area here, right? So let's use bar replay here. Give my computer a minute. It's freezing here. Okay. Yes. Let's try this again. Okay, bar replay doesn't want to work right now for whatever reason. Okay, so let's say all this didn't happen yet, all right? And we're waiting for the pullback, right? So this move happened, cluster, right? Price broke below. Do you want to enter here? No. Do you want to enter down here? No, right? We don't have FOMO. We're going to wait for the pullback. Can this be a pullback? Yes, it can be a pullback, but is it a deep enough pullback? No. This is not a deep, this is a baby pullback. I wouldn't even consider this a real pullback. This is just a minor level of structure at this point in time. This would be a stronger pullback for me, right? So how do you confirm your pullback levels? First of all, whatever your eye sees, right? For me, I would not enter here. This is just not a deep enough pullback for me to be confident to enter in for sells at this point in time. Would it have been a decent move? Yeah, catching this, fine. But I'm just not comfortable with this kind of a pullback, okay? What I want to see is this level get tested. I want to see this level get tested again, because this is the level that it held for so long. This is where the breakout happened, right? This is where you had your bearish order block push out here, and you want to see price come back and test that level to continue to the downside. So what do you want to do? Well, let's break out fibs, right? We have fibs from a swing high to our swing low. Where did price retest? On the same level, 61.8, in between our 76.4%. So if you see price, this pullback happen in front of you, so what confluences do you have? Well, we're in a downtrend. Price is making lower lows and lower highs. Price broke a major level of support. We have a breakout that happened. We need to wait for a retest. That's like 4 confluences right there. Price came back inside our 61.8%, 5th or 6th confluence, whatever. I don't know what number we're on. Rejection level. And then what do we have again? Oh, I don't know, a cluster. We have another cluster right here. Beautiful little order block forming here. Broke out here, and what did it do again? It retested what? The block. Cluster, breakout, retest. Cluster, breakout, retest. It literally does this over and over and over and over and over again, guys. It does it over and over and over again. Like, I don't know how else. I'm giving you guys all the tea right now, all the juices, all the bombs. Everything you need to be able to trade gold, I'm giving to you right here, right now. You need to watch this video over and over and over again, because this is what you're going to be seeing over and over and over again on gold every single day. If you can wait for these confirmations, you can make a lot of freaking money in these markets. I'm telling you right now, guys. I'm telling you right now. I see this every day, all the time, every day. I'm looking at it, back testing, and I'm like, Jesus Christ, it's just blowing my mind at what I'm seeing right now. Every time it does this, you just have to wait. These are all freaking 4-hour candles. That's a long time to wait. But it's going to be worth the wait if you wait for that confirmation and then get in. Either you're going to get in at the retest of this level, if you had it already planned out. If you miss it, then you wait. Okay, retested, broke out of this cluster, came down here. I'm looking left. I know price needs to make a new low. It already broke this level here. It touched my 61.8. It broke out again, retested. Let me wait for that pullback. Pullback is the key word of this video, guys. Wait for your pullbacks. Once that pullback happens, get your ass in the trade. Have your limit orders already there and keep your stop losses in a safe area. And stick to your trading times. I don't trade gold during New York session. It's too jumpy. It's too volatile for me, and a lot more news during that time. I don't want to gamble with my money during that time. I'd rather trade during Asian, pre-London, Tokyo, during that time where gold moves nice and smooth. Like, it doesn't just do all this jumpiness, right? It moves nice and smooth. The candles are printing, doing its thing. And usually around London-ish, it'll start playing out. Sometimes you won't even see your setup until New York. It happens sometimes. But it's all a matter of waiting. Do you have to trade every single day? Do you have to catch a setup every single day? No, you don't. But it's worth the wait. Waiting on these setups, you have to wait on them. Okay? So, going back into it. I got all hot and bothered and excited about this shit right now. Okay, guys? But you guys are seeing it with me. I'm breaking it down with you guys. You guys are seeing this happen right in front of your eyes. What's happening here. Okay. Even here. All right. Let's look further down. Okay. Further down some more. We have a breakout again. We have a nice strong bearish breakout right here after this little mini cluster right here. After that breakout, what are you waiting for? A pullback. You can wait for this. This is a pretty decent pullback right here. Right. Then it pushed down and it pulled back up again. Pulled back up again, and then it came back down. And eventually, guys, our fibs was from swing high to this swing low. And then look where our TP was, negative 27%. And look what it did. It smashed through our TP, 27%. So at some point, it's going to play out. I mean, I can't deny it. I can't deny fibs anymore, especially on gold. I haven't tested it on GBP. I just don't want to do it. I already have my strategy down for that, so I don't need to add anything to it for GBP pairs. But for gold, I cannot deny the power of fibs when it comes to trading gold and trading it on the higher time frames. Very rarely will I use it on the 30, 15. I just won't use fibs on those time frames. But my daily, my 4 hour, sometimes my 1 hour, I'll look at it just to get a better entry or to see what the candles are looking like on the 1 hour on my fibs. I'll do it. But for the most part, my 4 hour, my daily is my bread and butter when it comes to plotting out fibs and where I'm going to look for my entries. And that's why I say to have your limit orders in place, because if you're looking for that pullback, that is the best entry you're going to get for that trade. Once you get this pullback, okay, you see price start rejecting, coming down. Can you get in here? Yeah, but then it comes down some more. You have another one. It's just better to get wick entries on the pullbacks. So you have to have your trade idea planned out before it happens. And just leave your stop in a safe area. I don't consider that gambling in any sense, because you have a whole, this is a whole breakdown basically. So it's not like you're just placing your trade anywhere and you're just hoping it comes there and it doesn't hit your stop. You actually have a plan for where you want your trade to go, where you want it to reject from, where your key levels are, right? Where your key levels are and why. I had your key level down here. You had a rejection here. Price didn't break. You have your 76% up here. So it would make sense to have your stop somewhere up here. Rather than somewhere in between here, and then just write it down. Even if you get in here or here or here, whatever, you still left enough room for the trade to breathe before it does start to push to the downside. If it does push to the downside and your analysis is correct. Okay. So that's what the 4 hour looks like. So let's look at the 1 hour. Let's see how we're looking on the 1 hour. How does this all look on the 1 hour time frame, right? So if I look at the 1 hour time frame here, well, let's see. Okay, I have my level here that I wanted to reject from. I have my cluster here. What do I want to see? The retest on the 1 hour. So I would take my zone or my line here and I would place it right up under here somewhere. And I'm looking for the retest to happen right about there. So let's see if we can use fibs on the 1 hour and see how that plays out, right? We're going to use fibs from swing high to swing low. Oh, what do you know? Swing high, swing low. Where did price come to? Right before 61.8. Right before 61.8, we have the pullback, which is a decent pullback of this level. It broke our zone here, though, if you look. So if you had your level here and you had your stop loss up here, your stop would have got hit, right? It happens. Your stop would have got hit, right? But that's why you go down to lower time frames and you see what's really happening. If you see this happening on the lower time frame, then you're like, okay, let me wait a little longer. Let me see what's going to happen first. When we had the fibs on the 4 hour, it showed up a little bit lower, right? But this one, it shows us a little bit higher. So we want to see that pullback. This could be a pullback too. If you look closely here, this candle broke down, broke up, and then it broke down, which is good. This is a decent pullback. It's like one candle retest, which is fine. But this was the real pullback right here. And then what did it do ultimately? It came all the way down. Where's your take profit level? Negative 27%. Where did price come to? Negative. It shot through negative 27%. Shot through. Okay. Well, Charlene, we're not going to enter on the 1 hour either. Okay. Let's go to the 30 minute. Let's take off fibs so we don't cluster our chart here. Okay. So let's go to the 30 minutes. Let's see what we see on a 30 minute. Okay. So price broke out of this little zone here, pushed up, liquidity, grabbed all of the stop losses that are sitting up here, grabbed everything, hit our daily level, shot all the way down, retested, shot down, found support at this level right about here. Price broke above, right? Retested this level here. And then it finally came down. Could you have caught this move here? Yeah, you can. But it's still inside this box here. That's pretty, this is a move that would just purely fibs and price action at that point in time for you to catch this move here. But nonetheless, it's still a move. It's still a move. This to this is a beautiful move at the very least. Okay. So let me go back here to the 15. Okay. Look how many times it retested here on the 15. This thing didn't just come up and drop. It came up and it played around a little bit, right? Played around, and it did what? Collected a bunch of orders. It did a little cluster on the 15. I don't really look for clusters on the smaller time frame, guys, because on the lower time frames, there's always going to be noise. There's going to be a lot more noise on the lower time frames. I want to see my clusters more on like my 1 hour, my 4 hour levels. Those are the levels that's going to tell me that I'm going to see a strong push in either direction. with those clusters. So really here, do I really consider this a cluster? Yes and no. Yes, because it looks like a cluster on the 15-minute. However, on the higher time frames, this is probably 1 or 2 candles that came up and then just ended up coming right back down. So it's really not a cluster. This is just your retest of this level here. Just a lot more noise on the 15-minute time frame. Okay, so I could go into a whole lot more detail on this for you guys, but this is gold. This is gold. This is gold broken down. This is gold in its like barest simplicity. I mean, it's the best way that I can show you guys how to use it, how to what to look for with it. Wait for your pullbacks, wait for your breakouts, look for your key levels to get broken or to get retested. And then wait for your confirmations. That's pretty much it. Like on this setup right here, right? Let's look at where price is right this minute, right? Price is kind of playing around in this area right about here, right? We're still in the downtrend because price hasn't broken, right? Came up here and made a high. Actually, let me use my line here, right? We're at a 4-hour high at this level, at the same level that price was before. Did not quite break it though. It's at the same level. So what I'd like to see is for a price to come up and test, maybe come through, and then continue to come back down. So what's happening right about here? Right here, we're seeing a lot of noise, a lot of confusion, a lot of clustering going on here, but not clean clustering, right? Because it's going up, going down. This is what I mean when I say cluster, like this, like straight consolidation. The candles printing side by side by side by side, not really trending side by side. Like this is down, up, down, up, down, up, down, up. So you really don't know what price is doing. At this point in time, it's just collecting orders. Just collecting orders for it to either push to the upside or push back to the downside. And because we're going off of our higher time frames, we're going to anticipate for price to continue back to the downside. But what's it going to do first? It's going to grab all the stop losses that's sitting up here, close below, and then we're going to start coming back down. And then when it does come back down, what are we going to wait for, guys? We're going to wait for the pullback. And then we're going to let it come back down. Okay, and the pullback of what zone? Oh, I don't know, maybe our key level right here where price had a hard time breaking. We wait for that retest level. If I pull out fibs from swing high to, let's say, swing low, where do we want price to come to? Right there. So if price comes right around here, could you miss it? Yeah, we don't know. It's inside this zone right here. Could it come down a little lower? Yeah. Where's our take profit going to be? Oh, at our last daily low, or even maybe even below. Maybe even below. Okay. And that's gold. That's gold for you guys. I mean, it's going to take a lot more studying. You guys aren't going to get this overnight. It's going to take time. It's going to take patience. It's going to take a lot more, back testing and everything on your part. But this is definitely something you guys can learn how to do. You know what I'm saying? It's not difficult. It just takes patience. It just takes discipline. And if you really want it bad enough, you can most definitely, capitalize on it and make a lot of money. Make a lot of money trading gold. All right, guys. I know I gave you guys a lot to look at in this video, but I'm really glad that I was able to figure this out and to be able to share this knowledge with you guys. Please drop comments down below, questions that you may have. If you want to join my copier group, all the links to my course, where I teach price action, everything, all that stuff, it will be in the link down below. Please like the video if you liked it. If you're not a subscriber, please, help me get to that 10K mark and beyond. That's going to, be a great thing for me. I love dropping these videos. I love helping you guys out. I know I don't drop them as often as I should. However, when I do, it's definitely worth the wait. Okay, guys, so appreciate you guys for watching this video. Enjoy your days. Enjoy your time here. Check out my other videos. I do drop a lot more knowledge in my other videos. That will definitely help you guys level up in your trading, become better traders, grow more confidence, become more disciplined, and really help you guys become, better traders with that. Okay, and one more thing I want to say about gold, guys. If you don't have the right account size, please don't trade gold. Don't do it. It's not worth it. You need to, if you don't have like a, 3, 4, 5K account, I wouldn't really touch gold. because it's very easily, you can blow your account with it. You can over leverage with it. You can miscalculate the way the point system works, because it's not the same as like pips and points with gold. It's an exotic, so the point system is kind of different with it. So just be careful with that, guys. If you're not ready for this pair and you don't have the account size and you're just, just not ready for it, I wouldn't trade this pair. I would stick with GBP pairs, stick with, stick with currencies until you master that. Then once you master that and you have the proper account size, then you can, delve into gold and then see what you can do with that, if you want to take it seriously. Now, if you're just playing around with it, take your little account and do whatever you want to do with it. But if you're looking to be serious about gold and really catching setups and really making money with it, you need to have the right account size to be able to do that. Okay, guys? So appreciate you guys for watching this video. This is Charlene FX, your favorite female trader, and I am out. Peace and love.